Alrighty, Doc here from North America, and good morning, good afternoon, and good evening, and good Christmas Eve. And for some of you, it's already there, because this is a global game. Our markets are relatively closed. I don't think there's anything trading except for the Forex, which works out really well. Imagine if we were a stock webinar, it wouldn't be worth talking about anything. But I had a sneaking suspicion that the currencies would still be functioning on some level, at least for another 4 or 5 hours. When I was younger, I remember the teller rate. Everything got quiet, everything was dead, but the teller rate was still going. That was the interbank market tool to communicate, and so it was always fun here in the States. I guess it was interesting. We had to keep our markets open. We all knew it was stupid. We kept on wondering, one day they'll realize they need to shut down. But the trading floor was left open. The place was literally a ghost town. There was like almost nobody there. And but someone had to man a desk to make sure in case there was an execution that needed to be done. And that was when we had very active currency trading on the cash market, the spot, on the exchange, the options. We were trading the options. And so back then we had the big teller rate screens. That was the name of the company, teller rate, and it was the interbank market. And you could see, basically you could see Citibank, or you could see Deutsche Bank, or you could see all these other banks. Yo, Carl, what's cooking? Hey, cowboy. Good Chavez. Yes, indeed. Merry Christmas. I'm talking to the world at this point. I'll ring it right back. So the teller rate, after a while, the teller rate would kind of like slowly creep into Christmas Eve. It would be like, I guess it could be like 3 in the afternoon now, or 4 in the afternoon in Europe. No, it must have been even later. It might have been like 5 o'clock or something like that. And so here in the States, it's like 1 or 2 in the afternoon, and it's dead. And you would see like people starting to say stuff like Merry Christmas. And once one did it, it was an avalanche. You would see Merry Christmas, you would see this, you would hear somebody say something like, Merry Christmas, see you in 2 weeks, things like that, because trading desks back then would shut down that early. I mean, not early, that long. They would shut down. Trading desks would go quiet. Currency markets were really tough to deal with after Christmas Eve, and then they would get going after a couple days, a little bit for New Year's, and then boom, they'd fall apart again. Get very slow. Europe was very slow back then. The stock exchanges were closed, literally closed. They would close them for like 6 days for the holiday, and so it was always funny. But I never forget those quiet Christmas Eves, not Christmases, Christmas Eves, just waiting to get, someone had to man the desk, someone had to be there. I was a broker. I had to have, I had to be there, and I had a clerk, and I used to say to him, get out of here. I can do this. I can sit here by myself. I don't need you to be on the phone. No one cares at this point. And so that's my memories of Christmas Eve always. They'll never go away. The slow afternoons of a Christmas Eve, and watching the teller rate after being very professional all year long to get funny. So that's my train of thought for the day. Now, I had the sneaking suspicion, as I said, that when I said to Janos, yeah, I'll do my webinar because, there's a good chance that the currencies are going to be functioning. They're not wild and woolly right now, but they are functioning. Matter of fact, I even have a, do I have it? Where is that? Oh, yes. I put the euro. We're starting off like we always do. We start off with the Swiss franc right there. And there's the Swiss franc, and it's moving down for the last couple of days. And I put a pink line in there because it's pretty much looks like very cleanly going to close in the weekly sell, especially with nobody around, unless some incredible disaster occurs. And I doubt we're going to see that. So our fact check spreadsheet is up to date, as if it's next week, really. I filled it all in, and but I labeled it as the 25th, just in case, but it should be the 27th for Monday, because that's the same sheet we're going to use. Obviously, I don't think anything's going to change today, and I just think that it's going to stay like that. So you can see here, The Swiss moving down means the dollar is weakening again, and we've been watching that. It could be the end of the year, it could be, whatever. At this point in time, it doesn't seem like there's a lot of conviction for any of this. That's the way I look at it. It doesn't look like much conviction whatsoever. So let's widen that a little bit more like that. See how that looks. Does that look pretty good? I think you can see that just as well. It's even better. And so that's really where we stand at the moment. Now let's drift over to the euro this morning. And not only do I have a euro there, since the futures are not really trading today, when we go to look at them, we'll just be looking at yesterday's trades. And we're not seeing that. Now let's check. We'll check it out on Dukascopy. Chances are they're going to have some type of cash intermarket on some of this stuff, so it'll be good, like gold or something like that. And so then you can see here on J4X, same thing, same pressure. You see our lines heading down, like we are right here, I guess it is. Oh, well, no, that's the euro now. I was going to say, why does that not match up? So let's slide the euro in there now. And there is the euro. And then what I did is, I thought, how do we liven this up a little bit or have a nice little headline for somebody to want to pay attention to it. So I did some short-term work. Jordan, who's been in and out of our webinars late, has talked about different products. We've done some interesting things with Jordan's idea. Commingled what we do with J4X. And we're going to show you that in a little while. It's going to be a look at the stochastic fast versus the stochastic slow combined with our math itself on the same screen. All right, from there you can see the euro looking very healthy. You see it is popped into a weekly buy, doing the same thing for the next week. It's going to be in a weekly buy. The daily's been in a buy for 2 full days. Where is that at? That's line 14, right? Yeah, line 14, right there. 2 full days. That's how it's going to come in on Monday, like that. Because we're not going to take these numbers today whatsoever, because it's just a sleepwalk. And so at this point in time, and finally, I guess what we can say is we can move that 12 to a 1. That's what we're going to do there. I guess I didn't adjust the weeklies. I just did the dailies. I think that's what it came down to. So, and it's going to be the same way with the Swiss down here at 21. Swiss is going to show, instead of a 5 in a weekly buy, we're going to show you a 1 in the weekly sell now, like that. We'll have to clean that all up over the next 3 days, so we'll have plenty of time to do that. And so you can see a little, strength in the pairs against the dollar. It seems like it's rampant all over the place. Over in the euro, the GBP cable trade, same situation. And I think that was our what was our headline yesterday? I think we had said something like that too. Something about weak being strong and strong being weak, and the day before was the pairs are strong against the dollar. That's what it was. So, this theme seems to be carrying along pretty comfortably. We're seeing that extra strength in the pairs trades, and it'll be interesting to see how Monday comes out with only 4 days left in the month. What if there's still the conviction to hold on? I myself think, it could be an interesting week next week. It could be wild and woolly. It's possible. And as you can see right here, the cable itself, the British pound against the dollar, moving up also with 3 going on a 3rd day. A lot of green there. You can see it here on J4X. Right there, same situation. You can see the Hinkies moving up. And over on the, we're just missing. I don't know if it's going to close in that weekly tonight or not. It's so close. Yesterday I think we sold as minus 0.00038 or 39. Now it's 5.9. If this histogram does take out the top of this one, maybe then, maybe. But at the same time, there's a good chance that Monday it will launch itself, just reach, and then I guess that's how they're going to finish out the year. They're going to try to finish out the year with a stronger pairs trades against the dollar. Um, is there something in my back of my head that has some analogy to that concept? Not really. Do I really see anything that I would really want to carry into the new year? Not really. I just want to see how they start to trade. I think that the new year in January is going to be very fascinating in the sense that I think they're going to get it going. In other words, the action's going to kick up. They'll probably do some positive things, or money might just go, oh, to hell with it, and we're out of here. They are going to raise rates. We do know that. They definitely will raise rates. At least 3 times, not maybe it could be even much as 5. Who knows? There's going to be a surprise rate. I'm almost convinced of that. We will have a surprise rate increase before the designated one in the spring or early summer that they want to do. So, and I think it all hinges on the same thing. Sometimes you wonder how unimaginative everything is, but what it really looks like to me is that when Powell becomes sworn in, I think he's going to go all Paul Volcker on us. I really do. I think he's going to go make a statement about wanting to stamp out inflation, and he's going to kick that pig. He's going to really do it. So that is going to be really, really insightful in many different ways. Let's see what we got here. Insightful in many different ways. There we go. All right. So just answering a text there. So over on the cable, we can say that's done for the day. Now let's go check out. Let's lower that volume too. They sound good over there. They sound good. Okay. So let's take a look and see who is next in this lineup. Now Turkish lira, you can see we start off with the dollar one, but we've moved on the spreadsheet. Now we follow the euro Turkish lira. It's just so much more insightful. It finally got into a daily sell yesterday, and now it's turning back up again when it goes to dollar Turkish lira. It's obvious that the best pairs trade to pay attention to, we've been watching it for a while now, is the euro Turkish lira. That went into a daily sell 4 days back. 1, 2, 3, 4. This is the 5th day, and it's starting to perk up a little. So at least it pushed it into the sell on this one slide right there, which is really good. And I can see this thing hesitating in this area. Now we have a general idea what they've done. I mentioned it yesterday. Turkey has now put a put on, giving out free puts, I guess you could say, to anybody who owns the, that's the thing they haven't really identified, but they're giving free puts to people who buy Turkish lira. I think that's institutions and banks or population. I'm not sure. They haven't made that very clear who they will allow and who they won't. But they're giving out a free put. So in other words, what they're doing is they're guaranteeing if you buy a Turkish lira at 14 and the Turkish lira goes to 17, they're going to give you the two handles. They're going to give you that in some type of interest or cash or something like that, and it's going to be paid by the Turkish government. So now they've basically put a new tax on the population. They're going to prop up their currency directly through some type of taxation. That's wild. I'm wondering if anybody else has done that in history. I guess we'll have to look around, but most currencies float. So this is a way of, let's put it this way, would I like to see China do that? I would, if they would only float their currency. Because this is not going to stop the Turkish lira from moving up and down. This is supposedly going to protect people who invest in the Turkish lira. I would really like to see China with a floating currency so we could actually see if their GDP is plus or minus. I would love to see that. Right now, it's going to be plus forever as long as there's no floating currency. Are you going to be able to get your money out of that country? Obviously, ask the investors at Evergrande or some of the other companies where they try to take money outside of China. Pretty hard. We used to call that on the trading floor the cockroach hotel. There used to be this commercial about Anorex or something Rex. It was a cockroach, the insect in the cities, popular in the cities, and you try to get rid of them, and they have this little device where I guess they like to eat whatever's inside that device. They go into the little device and they can't get out. And we used to call some particular type of action in the marketplace the cockroach hotel, where you can get in but you can't get out. In other words, you can buy with your money, but when you go to sell, there's no buyers. And so that's pretty much what China is. There's buyers, but when you try to get your money out of there, the best you can do is carry the product that you bought out. That's about it. So that's really great if you're buying whatever they're manufacturing for you. But ask Evergrande. Just as 2 days ago I showed you that China, had did the overnight rate and perked up liquidity for the indigenous, the locals, by 200 billion. Yeah, with a B, billion. When it comes to the real estate investors, which you can't take the land out of the country, those foreign investors needed just $17 million to keep Evergrande out of bankruptcy, and the China government were nowhere to be found. So that always makes a big doubt in my mind about any numbers that come out of China, because if they can afford to put 200 billion into their banking system to lower rates for domestic investors, then why can't they give 17 million to Evergrande to prop up their investors who are outside the country? They can't. China is not rich enough to give their number one real estate company $17 million. That's it. And then another one was like $9 million payments for the bonds. So how can China have a 6% GDP, or how can China be really growing if the government can't prop up the number one real estate company with just $17 million? I mean, it's like the mistake of a Lehman, in a sense, where they allowed Lehman Brothers to go out of business and declare bankruptcy in New York. Then after that, they started realizing that's not the way to go. Well, they've had a couple months now where they could have re-propped up Grande, and investors would have probably come in. There would have been more money pouring in. It shows you the level of I want to say financial ignorance. I guess that's the best way to describe it. Financial ignorance in the country there. And so and then they do this $200 billion deal where they're propping up the banks with lower rates because that money can't leave the country. It's stuck inside the country. But when it comes to money leaving the country, they can't even prop up $17 million. So something is wrong there, when it comes to financial literacy. And that's what makes me always concerned about when someone tries to tell me that China is really powerful, they're going to take the United States, they're going to dominate the world. It's like, no, they're not going to dominate anything. They're going to pretend to dominate, and anybody who's foolish will lose money plowing it into there, thinking that they're going to get that money out. Because if they can't prop up Evergrande, then they can't prop up anything. Because that is pennies. Imagine all the foreign investors who plowed money into real estate in China. They overdo it. This Evergrande, their number one investment company in real estate in China, they can't make their payments, and the government can't give them $17 million in cash somewhere along the line to take care of it. Big question mark. In other words, people always say here in the States, a lot of the hedge funds say you can't trust the numbers there. And then there's other blind funds, especially the pension funds and so forth, where they're throwing other people's money at that. And so that's the reason I don't dislike China. I don't love China. I don't think anything about China. I just think of it as another country in business. Just like, now I do kind of lean into England at times because I kind of am always surprised that, since they're the most capitalistic of the foreign countries, how it's not doing better. but I don't really love or hate it either. And any more than that, just capitalism and the numbers and the math. And so when China can't just put out $17 million to keep the mystique going, keep the company alive, so forth and so on, you have to doubt that they're doing that well. And that's all. Just thought I mention it every so often. I just want people to understand what we're talking about here. $17 million, and then, it would be okay if they didn't do that. And I'd still be unhappy about it because it doesn't make any sense to me. But then when they throw $200 billion just weeks later at the interbank market itself, the domestic banks, you have to wonder, how much, it's like the Fed printing money and doing the QE. In other words, it's not really real. So, when you hear 5.5 GDP or 6% GDP or growth of this or growth of that, nah, it's not real. It's obviously not real, but they prove it by their actions. If it was real, they'd throw $17 million, at Evergrande and just keep the investors happy. I mean, I would have done that. If I was Chairman X, I would have done that in a heartbeat. If I was Premier of the country, I'd have been like, give them $17 million. Let's keep the foreigners flowing those dollars into this country. Let's make them believe we're real. But it shows a real lack of financial literacy to not do that. Even Bernie Madoff would have done that. I can see that. Yeah, I mean, if you're really going to run a pyramid scheme, and you have to think that China does function like a pyramid scheme, at least Bernie Madoff would have put the $17 million out to help out Evergrande. So anyway, that's where we're at with that. That's how we drifted from that, from the Turkish lira, because at least the Turkish lira, the currency floats. And that's an important thing, because then you can measure your inflation, you can measure your CPI and your PPI and your employment and all that stuff. You can start to trust some of those numbers. They might be fudged, but at least when you have a currency floating, like all the other currency pairs in the world, minus a few countries like Hong Kong and China and so forth, then you have to really doubt the growth numbers. You really do. It's one thing for a central bank to prop up a currency. You see Turkish lira is a perfect example of it. They've tried propping this poor thing up, and it's gone from 1.5 to basically 18 in the dollar in terms. It's gone from 1.5 in the euro to like 21. Okay, that's central bank propping up. I can understand that. That makes total sense to me. They're failing at it, but at least it makes sense to me, and you see the true value of the currency, through the open market. But when you can't see the true value of a currency through the open market, then you can't trust any of the math coming from those countries. Like I said, CPI, PPI, GDP, the whole bit. They're not legitimate numbers. They're just, because if you take the yuan in China and make it 14, all of a sudden their GDP drops in half. If it goes all ruble, like I say every so often, then imagine their GDP is like a -5. So that's the crutch of it all, really. We're just looking for the math here. We're not angry or happy or dislike or like. We're just looking at the math, and that's all we ever want to look at is the math. And we want the cleanest numbers we can find. And what I mean by that, the most accurate numbers. That's all we want. So when you can't bail out your #1 real estate company for just 17 million, but can turn around and hand the banking system 200 billion domestically, wow, that screams pyramid. I mean, that's Bernie Madoff all the way. That's pyramid. I mean, there's no other way. And even then, like I said, Bernie Madoff would have found 17 million and given it to prop it up. At least he would have had the common sense to know that you're making money nervous when you don't. So, anyway, that's where we are with the Turkish lira, and that's where we are talking about a real currency like the Turkish lira, as bad as it's beat up compared to other currencies that are fixed. All right, now from there we're going to jump over to the Canadian And you can see the Canadian has been moving down for the last couple of days. So we always from here think, okay, well that's a sign that the weakness in the metals may have stalled. We might be seeing some more strength in the current the metals, and we can show you that. I remember they were sloppy yesterday, and we can show you how they went out. They went out pretty much at the highs of their day yesterday, which was like, yeah, cool. So you can see here, there's gold, and gold did go out at its highs of the day. Now let's take a look and see what Dukascopy is showing us today on how live it is and what's going on with gold itself. Right there. So you see that 108 looks like it's holding up pretty firm in there. It's not showing a lot of weakness at all in the live trading here as we see today. And just confirm. I'm almost sure that is live, right? There. Yes, that's live. So I think it's live. I think it wants to tell us it's not. Why does it say the 26th? Isn't that Sunday night? So I don't know if they updated. I don't think they're updating that. Let's just leave that for a second too. I don't see it bid offer changing. So I think that the metals market spot is also closed. Yes, I see it there now. It says up top it's closed. Okay. Yeah, so they're not moving the metals market around that much at all. So they did all go out pretty firm, when it comes to the gold. And in the crude oil, let's take a look and see if they're doing a spot crude at the moment. Maybe Brent? Let's see what Brent says. Brent says, it looks like it's live, Brent. And let's see what the Texas stuff looks like. The West Texas Intermediate Light. That's closed, yeah. So they're showing that as closed also. So let's see what Brent is doing. Brent might be actually open. Yeah, I think it just changed because it was 88 offer. So now it's 90. And so you're seeing some firmness there. And at the same time, that would make sense since we're seeing the Canadian move down. So when you see that pressure on the Canadian in the one direction, yes, they're making quotes on that. So you can see Brent is firm, holding up, trying to lift a little bit more. It's going to be interesting to see how the metals and the oils function in the new year. My tongue-in-cheek title a couple days ago about the weak, or yesterday, the weak is strong and the strong is weak. We'll find that out definitely going into like the middle of next week, like next Wednesday or Tuesday or something like that. We'll start to see real action out of it. More than just an end of the year type of adjustment type thing going on. And then from there, let's see, what do we do from there? We go to, we did gold and we're doing the Brent. All right, so from there we do take a quick look at the couple currencies that we finish off with. And that is, we run right to the South African Rand, and we assume that since the metals went out pretty strong yesterday, we would think that the Rand would be moving down. And in other words, the dollar's losing a little value against it. So let's take a look at that, see how they look there. And there it is right there, dollar-ZAR. Yeah, see, it's moving down. Good sign. Matter of fact, look at that, it's flirting with the weekly sell. We've got some really good potential here. Would love to see this thing go into the weekly sell, come back down into the low 14s or mid 14s. That would be great, and that might be the beginning of seeing some gold action on the upside. That would be really, very positive to see the metals complex start to finally get into a more positive role. When you have 6% inflation, someone's got to want the stuff. From there, we take a look at the ruble, right there. Ruble kind of flattish, but still down for the day, so that's, or just flat for the day, and a sell for a couple days here now. And the weekly is trying to pierce down too. I think there's a lot of good feelings that there's not going to be some type of war or invasion or something like that going on. I think things are smoothing out to some extent. I understand we're sending a fleet of gas tankers to Europe at this point. Supposedly, they're really, the price of natural gas is so high that tankfuls of, these natural gas ships are loaded heading to Europe, because I mean, natural gas is trading 10 times higher, not just twice as higher or 5 times higher, 10 times higher. So in the States, we have natural gas trading at something like $3.80, and in Europe, you have it trading almost at $38. It's like, wow, it's even beyond 10 times. It's like, what is that, like 14 or 12 times. It's like 12 times the price. So, it was very explosive about 3 days ago. All right, so from there we drift over to the yen. Let's see what they're doing with the yen this morning. There's the yen. Yen is battling its way into a buy. It's kind of unched for the day, kind of quiet, which makes total sense. There's no particular reason for a market like that to be moving at the moment, just because of the world being quiet. And then last but not least, we jump over to the Mexican peso. Where are you, Mexican peso? Right there. And you can see there, same situation. Mexican peso working its way down, playing with its weekly sell. And like I said, we're not sure what's going on with the way I mean, Mr. Biden, we mentioned what happened with Mr. Biden, Mr. Trudeau, and I'm not even sure what the president of Mexico's last name is. Sorry about that. But in the end result is the three of them got together, and after they got together, this currency went from 20 to 22. So I don't know what he said to them or what he threatened them with. It surely freaked out the currency. Freaked out both currencies, actually. Canadian also got freaky like this and started to sell against the dollar. Anything is possible with Mr. Biden. The man is definitely unique in his way of doing politics. Democrats can do that stuff. They can get away with a lot. Okay, so from there, we pretty much finish off that. So now we'll jump over to the metals complex itself. Let's see what copper looks like. See if they're making a quote in the copper market. Looks like it might be a lot. No, it's closed also. Copper is closed. Let's see what silver looks like. See if they have a silver market going on. That is closed also. And you can see the strength that they put into that. And we can show you over here on Chicago. Right there. Closed out on like, I don't know, 5-week high, 10-week high, something like that. What was that? That's November, right? So it's pretty much back to the November price, November lows, I guess you could say. It's not at 23, but it's trying to go to 23. Hey, 47. Can you look at the Nikkei? Sure, let's look at the Nikkei. Aren't you more interested in Gbp Jpy? We'll go to that next if you'd like. Let's see, the Nikkei on Chicago Quant is right, where is it at? That's Hong Kong. Here's the Japanese index. Where's the Nikkei? Why am I having a problem with that? There's the FTSE. There's Hong Kong. There's the Nifty 50 out of India. There's the Japanese 200. I guess we can use the Japanese 200 to start off with. Let's see if we can find. I don't see anything else. I know that, I think the FTSE owns it now, right? So, the Financial Times owns the Nikkei, I think. All right. So that's the ooh, what is that? That's the Japanese 200. It's a closed market too. It's not live. And we'll go take a look at it on our work too at the same time. Oh, okay. You want to see all of them? Sure. Let's see what's going on. Well, let's do the one I know that's ticking live because the others are closed. So, we'll give you the mathematical opinion of our work from there. But let's find the Gbp Jpy. There it is, right there. So there you can see 3 days in a buy there. This is the third day. It's flirting with the weekly buy. That's pretty cool. So that's a very positive thing right there. Now over on the S&P 500, we'll go back to that. That closed firm and in a daily buy, but still in a weekly sell. Just missed it by the hair of its chinny chin chin right there. And so you can see here, it closed out, going on a third day in a buy. So there was strength there. I think it made an all-time high at one point yesterday. Is that an all-time high? 4,731, 4,023, 35. Okay, so that's the all-time high right there, that 35, back in late November. So it's just missed the all-time high yesterday. I think this is all end-of-the-year dance. Could they have a ho-ho rally? I don't think it means anything at all. I think that when asked about bear markets and bull markets and things like that from old traditional days, as far as I'm concerned, as long as there's a quantitative easing, none of it counts. It's kind of like, I don't know if any of you are comfortable with baseball analogies, the American sport baseball, but there was a point where we had 2 or 3 guys taking steroids, and they broke all kinds of Babe Ruth records, and Hank Aaron records, hitting home runs. And now in the history books they have asterisks in their name, next to their name and the records, mentioning that they were on drugs, they were on steroids. So one was a Chicago player and one was a San Francisco player, and I think there might have been a third one. But in the end result is that there was a third one, maybe an LA player or something like that. So in the end result is that it's hard to call things a ho-ho rally when you have a Federal Reserve plowing 100 and some odd billion a month into the marketplace. And so at the same token, it's awful hard to declare that there's a bear market or a bull market when they plow that much money into it. I guess if anything, the fact that they plow that much money in makes you just suspicious about being invested naked. You would think that people would be selling calls and buying puts all the time in indices or something like that, just protecting themselves, or doing some type of spread thing against their portfolio and rolling it constantly and not ever being naked, just because of the fact that one day, like I said, what happens if Powell, after he gets sworn in, does a 50%, a half a point increase in interest rates, and says, makes a statement like, well, we're going to try to put our foot down and stop inflation. And all of a sudden, the whole world is going to go, what? Wait a minute, what is this rubbish about being responsible? And then the next, 6 weeks later or something like that, he goes and does it again. And it doesn't wait until, June, where he's talking about raising rates. He starts raising them in, say, February and March, like that. There'll be some comfort level in the investment public, the professional investor, saying, good, he's finally paying attention. At the same time, there'll be a lot of paranoid, like, shoot, I don't want to be long this stuff right now. I want to be flat. So that's, it's going to be a combination of both. It's going to be like, wow, I like it and I don't like it at the same time. And so that is literally the whole gist of it all at this point. We don't know if where anything stands. That's like the Evergrande in China. How can those numbers be real if they can't bail out a simple $17 million problem? That's the problem of it all. All right, and that's what we do. We try to talk math and reality here all the time. Not like I hate them or love them or dislike them. It's just the simple math of it all. All right. So we looked at that. Also, Nasdaq. Now, Nasdaq, the Tech 100, it's obviously closed, but did not make an all-time high in there. But it's, it's acting strong. It's been in a daily buy, like the S&Ps, for a couple days, and it's still in a weekly sell. How's that? Do you want me to try to? Don't we have an ETF or something on the Nikkei, or a futures contract? Let's just take a look and see. I thought we did. We have the Russell 2000. Let's try taking that and turning it into the Nikkei. Let's see. Nikkei. I think that's it right there. We have to add it. That's what it is. Okay. Yeah, so that was the December contract. It expired last week. Now, let's put a new one in there. Take a look and see what that looks like. Add symbol, futures, NKD. Look up. There it is. I imagine we'll look at the March contract right there. Is that right? NKD H. Right there. There it is. There it is. Globex. Okay. Close. Come on, go back, go back, go back. Right there. D, like in data. There it is right there. NKD again. Okay, so right there, it's in a week. Looks like it's. Did it go to a weekly buy last week or this week? Let's make that a histogram. Nah, it doesn't look like it did. Oh, maybe. Let's see what that is. It's right there. No, it just missed going into the buy last week, but this week it's definitely going to close in the buy. That's what it comes down to. So it's going to close in a buy. And what's interesting is the Dow Jones Industrial Average did the same thing. Let me just show you what that looks like. It really jumped up last like 3 days. The Dow Jones Industrial Average. The daily looks pretty comfortable. It goes into a buy. That's really odd there. That's what it is right there. It misses the gap because of the dot. I'll have to check that out. Yeah, check out the Dow. Dow's doing the same thing. Really strong looking. Almost made it into the buy last week, but failed. Whereas all the other stock indices are pointing down. Yeah, there we go. All right, so what do you think, 47, about the GBP Jpy? I thought that was kind of interesting. It's flirting with the weekly buy, trying to move up. It's again, it seems like everything that was weak is strong, and everything that's strong is weak. So that seems to be the theme there, All right, what else can we say about any of that at this point? So looking at the metals market, you can see that they've headed, I guess in many ways you can say they ended the week at their highs with no problem. That was very clear. And they've made some nice challenges of the last month. Same thing with gold and copper. I think copper did something like that. Yeah, same thing. Definitely showing lots of buying coming in here at the last couple of days of the year. The metals complex is really showing it. We saw platinum jump ahead 2 days ago, make a nice move in the January contract, right there. That day there. Yes, it was Wednesday. What's today? Friday. Yeah, Wednesday. So Wednesday took out the highs all the way back to late November. So they're definitely reaching for the metals complex here, going into the last couple days of the year. Anybody want to see anything else? I love roaming around. Look, let's check out the bonds real quick. Interest rates are rising. That's what this is trying to tell us. It's been in a weekly buy. When this thing goes up in value, we'll tighten this up a little bit for you, but when this thing goes up in value, the price of the contract, that means interest rates are going down. I know that's very irritating. A lot of people get fed up with that stuff. But that's how it works. So when you're looking at a bond, if the price of the bond is going up to buy, that means interest rates are going down. And vice versa. When the bond price is going down, that's what this contract represents, the bond price, not the yield. It means interest rates are going up. So it looks like we're going to go into a weekly sell, that's for sure. We've been in a daily sell for a bunch of days. Was it 4, 5, 6, 7, 8 days? And so there's a lot of pressure on this product. There's a lot of pressure to start to head back down. It'd be interesting. There are some money managers I've heard actually say they're looking for a 1.7 yield on this going into the end of the year, which it was at the time when they were saying it was like no more than 3 days ago. So this week, at the beginning of this week, money managers were starting to say, interest rates are going to rise. I think they keep the attitude that I have right now. I think a lot of good money managers are thinking the same way I am. There could be a surprise interest rate increase out of nowhere, and then he could do it again, and then join in. I wouldn't be surprised if they raise rates like 5 or 6 times. I think at this point, I don't think there's once he gets sworn in, there's no reason to play politics with the financial system. They've been playing politics since 2008. Ever since they started this quantitative easing stuff, and it's been ugly. It's been really ugly. And Mr. Obama went 8 years and they couldn't raise the rate once. I think they raised it once, just like a 1/4 percentage point. Mr. Trump gets in, and all of a sudden they raised the rate, like from a 1/4 point to something like 2 1/4 or 2 or something like that, in quarter increments, like 6, 7 different times they raised it on him. And he was like, "What are you doing? You wouldn't do it to Obama for 8 years, but all of a sudden you're doing it on my market." And so, Biden comes in, and we have 6% inflation, and they can't figure a way of raising rates. So that just tells you how much political influence there is on this Federal Reserve, which then puts pressure on everybody on the planet. Everybody gets stuck with the same situation. So that's where we're pretty much at this point in time. Let me think about anything else anybody would like to see. We're going to have some little conversation. What I wanted to do today, because I was going to label the webinar, stochastics. Where's it at? Right here. Stochastics versus slow stochastic versus fast. And I was going to reflect the right there. I was going to reflect that. So what you see there is, that type of action. This is an intraday chart. We're using spatial numbers, time-wise. So you can see here, this is the euro, and you can see here when just like on J4X, when the white line goes above, it's bullish. When it goes down below, it's bearish. That type of thing right there. And so this is an intraday, showing you the same action using our math at the top, right there, our program. And then this is what we put on Dukascopy. Plus, we have an RSI on there. That's for Jordan, who's out there somewhere, and has been watching our math. So I thought that it was an interesting thing. Maybe we can make this bigger. There we go. Just looking at the way they work together, you can see when our work breaks down, and the J4X system that we have here breaks down, the white line pierces the dotted line. Matter of fact, we should probably turn off the, we can turn that off for the time being. We want to turn off the let's see, where's it at? Right there. Format RSI. Let's just turn that status off for a moment or two. So how do we do that? Right there. Format indicator, and RSI, and status. And it's off. There we go. So now you're seeing what we do with Dukascopy, and this is on an intraday basis. This is a 1 Tesla, as I call it, a 369. And so you can see when it breaks down here, you know, and the product is breaking down, you can see this is broken down. You see where it pops up, like our work, you know, it tries to lift right there. And then as it breaks down, you can see here it, you know, does the same thing. Now, you see here, it's turned up, but our work has not turned up at all. And you can see here it turns up for the 1, and not very good. It rolls back over again there. See the weakness, and you can see the white line pierces this. And just thought, you know, it'd be kind of fun to look at it. Now you can see here, this is where obviously this is not the best of things, because you see here we're still in a sell on our work right there, and it's breaking down. Now you can see our work is turned plus, and this is plus, so we would expect to see strength. When the two of them join together, we see a lot of consistency. And so we thought that that would be fun to look at a little bit there today, you know, since it's a holiday and there's not much more. And I thought we'd label this webinar Stochastic Slow, Stochastics Fast, because this is a good example of how well, compared to say MacD or RSI or any of these things, rate of change, how well this works much better than any of those. And I know that the Market Technicians Association refers to this as a slow, or no, a lagging indicator, they call it, whereas they call MacD a leading indicator. But we see, you know, if we stick MacD in here, you know, one of the leading indicators. Let's see if we can find it here. And we're going to just slide in like a MacD. And if anybody would like to see some indicator and see the comparison, just shout it out. We'll do it. But this is what I thought would be interesting to look at. Let's see. There's McClellan, MacD. There it is right there. And so there's a good example. There's the MacD. And it's, you know, it takes, I guess the red and the green, when it finally pierces, it's telling us its weakness. And if we move this up, you're going to see that this is so much more sensitive to the marketplace. You know, it reads the strength that's coming in here, right there, whereas the MacD is not really reading it at all. And that's why we say this is a much more successful indicator, much more leading indicator, like a super leading indicator compared to the MacD. And the Market Technicians Association should, you know, start considering things like cross-matching different indicators, because they can be much more informative. In this case here, you can see our work is turned up for 2 histograms now, and the white line is through the 0 line, and this is through, and you can see here this is still just cruising down. Now if this thing goes and takes out like one of these highs here, it just shows you how insensitive the MacD is, or a leading indicator is. And it's a quiet day, but it's a much more positive tool when you look at this. It reads the strength, you know, much better, whereas this thing here is, you know, it's a slow moving indicator, very slow moving indicator. Matter of fact, in this case here, it took, look, this went and turned here, the RSI slow versus the fast, and this was still riding down. Matter of fact, if we move this up a little bit like so, you get a chance to see the MacD even better. You can see that. This picked it up, just like our math started to pick it up. So we can widen this. You can see there, the histogram went plus right here. You can see the slow and fast went plus right there. And you can see the MacD is still just cruising down. You can see missing the transaction by like 4 or 5 bars. Do you still use the CCI? Not particularly. Only thing we use is I was using the CCI on my I guess a couple years ago for the contest, I was using that to try to utilize the stochastic in a sense. I think I used the CCI in my contest for Dukascopy that I won a lot of contests with. You know, 1s, 2s, and 3s, and 4s, things like that. But not really. I find that the CCI, you know, is which is a good tool because it's a stochastic, is better. Now, why don't we do that? Let's remove the MacD and stick the CCI in there. Because I do like the CCI. You know, it's a good tool, and I used it for a bunch of years on the contest. Let's see, where's it at? Commodity Channel Index. I think that's what it is right there. There we go. And so there, you can see here it turns red. It's playing this range thing too, you know, and breaks down. Now in this case here, it did show a bottom right there. Let's see if we can do this. We'll move this one up to there. Move this one up to there. And we'll just move this up a little bit like that. So you can see here, you know, it goes into a buy. We go into a buy. These two do. Right here, this one and this one. And the product goes up in an intraday basis. And you can see here, it generates a bottom too at the same time on the CCI. CCI did that here. Joined in. So CCI does seem to have, you know, some nice accuracy. There's no doubt about that. We just enjoyed more using the two stochastic algorithms battling with each other. We find that to be more accurate, you know. I think that's the best way to describe it. So, what else can we say? I guess that's about it. Got anything else? 47? If not, we're going to sing our way out of, like, you know, start off with Happy Trails, and we'll go right to Jingle Bell. I'm going to say Merry Christmas to everybody, and we will catch you all on Monday. So this is Doc from North America on a Christmas shortened week, and we'll catch you all on the flip side. So happy trails to you until we meet again. Jingle bells, jingle all the way. Oh, what fun it is to ride in an open sleigh. All right, traders. Catch you Monday.